and welcome to another episode of the program. We'll start off with business news. Local investors have accounted for 88.22% of equities worth 1.009 trillion naira traded on the Nigerian Exchange Limited in 2 months to February 2024. Now, according to recently released data on domestic and foreign portfolio participation in Nigeria's equity trading, foreigners traded equities worth 118.92 billion naira. That's 11.78% in the reviewed 2-month period, while domestic investors traded stocks worth 890.48 billion naira, or 88.22%. Meanwhile, foreign inflow into equities was worth 40.71 billion naira, while foreign outflow from equities was 78.21 billion naira. Domestic retail investors accounted for stock trading worth 447.52 billion naira, while domestic institutional investors accounted for 442.96 billion naira. The management of Geregu Power PLC has restated its commitment to Nigeria's power sector, restating that the first listed power generating company on the Nigerian Exchange Limited (NGX) was determined to support President Bola Tinubu's power sector reforms. In showing commitment to Nigeria's power sector, the company has taken a significant step to align with new standards amid attainment of ISO 9001 and 14001 certifications from the Standard Organization of Nigeria. Speaking at the 12th Annual General Meeting of the shareholders, it approved the Board of Directors' 20 billion naira dividend payout for 2023's financial year, the re-election of 2 directors retiring by rotation, and authorized the directors to fix the members of the auditors, among other resolutions. Chairman Geregu Power Femi Otedola stated that the 20 billion naira dividend payout was a testament of the company's strong financial position and dedication to delivering shareholders value. Also speaking, an independent non-executive director of the power generating company, Doran Grouper, disclosed the company has invested $550 million in plant transformation. We'll take a break now. Company news is up next.
In the last 3 years, we have built a multi-purpose center, which is the envy of all in our constituency. And I can tell you that the people who are living there are already enjoying it.
Guy, do you think what this man just said is true? See, I seriously doubt. I'm sure it's one of those their silly lies.
And wait, do you know there's a way to find out if these things he's saying is true or not? This is the Construct app. It gives people like us a sure way to track implementation of constituency projects. It gives valid and verified information on location of projects, amounts allocated, amount funded, the level of job done, and even the profiles of concerned legislators. You and I can post directly on this app.
Are you serious?
This is the Go-To app if you want to know how our Commonwealth is being expanded by the government.
Wow. Let's even see if what this man said is true. Show me.
The Construct app is developed by Other Paper Nigeria with support from USAID and is available on both Google Play Store and Apple Store.
And it's true.
Of course, I told you.
Welcome back. Zenith Bank PLC has emerged as the best bank in Nigeria in the Global Finance Best Banks Awards 2024, winning the award for the 4th time since 2019. The bank was among other banks from 36 countries in Africa recognized as the prestigious Global Finance announced its 31st annual Best Bank Awards winners. Commenting on the award, the outgoing Group Managing Director, Chief Executive of Zenith Bank, Ebenezer Onyago, said it is a testament to its status as the leading financial institution in Nigeria, dedicated unwaveringly to delivering exceptional value to its stakeholders. He also lauded the board of their astute insights on exemplary leadership, the staff for their steadfast commitment and unwavering dedication, as well as the customers for their staunch loyalty to Zenith Bank. Meanwhile, Badger Paints Nigeria PLC has posted an impressive 125% profit growth as the company's pre-tax profit hit 799.8 million naira in 2023, up from 355.6 million naira in 2022. Now, according to the company's audited financial statement for 2023, its revenue hit 7.91 billion naira, marking a 25% growth from the 6.33 billion naira posted in 2022. Now, in 2023, the company's total assets hit 6.61 billion naira, representing a 19.6% growth from the 5.53 billion naira posted in 2022. The company made about 7.6 billion naira from the sale of paints and allied products in 2023, marking a 23% increase from the 6.2 billion naira posted in 2022. So while its interest income on bank deposits increased by 175% to 40.5 million naira in 2023 from 14.8 million naira posted in 2022. It's time for another break, but still to come, we'll discuss Nigerian fintech startups working on a blacklist to stop rising fraud cases in the sector. Stay with us, we'll return shortly.
Now, yeah.
Yes, Oga.
Okay.
Where I go come find 300 naira change?
I better try look for change now. When they do business. Hey, Timmy. I did, bro. I be. I beg, give me 200 naira. Make I take sort out this guy. If let's say no get change.
Take it, give us.
I said 200.
Give her 100 naira.
Yeah.
Okay, I agreed to pay 200 naira.
How much you think they carry people from that place we carry on the chair?
Oga.
What they touch me?
Now 100 naira. He agreed to pay.
Because that was what you said was the fair. Why you not go pay you? Why you they extort your customer? You see this corruption, what would they hear for news? They see for people everywhere. 9 BD so. This is corruption, not in our country.
Corruption not in my country.
Stop corruption now.
Welcome back. Now, some of Nigeria's largest fintech startups are quietly working on a joint strategy to tackle fraudulent transactions within their networks, starting with plans for a shared list of suspected criminals. The registry, tagged Project Radar, would enable companies to pool details, including banking and government identity data of individuals and groups that have attempted or made fraudulent transactions. According to the executives, the fraudsters are getting more successful at taking advantage of weaknesses in the financial system, but companies were not sharing data with each other to identify such actors. The move comes against the backdrop of a surge in digital payments following a cash scarcity forced by a fumbled banknote redesign by Nigeria's central bank. Now the startups leading the effort also have an interest in protecting their business reputations and valuations with investors. Now let's discuss this further with fintech expert Lemmy Joseph, the Chief Executive Officer, Echo Solutions. Thank you for your time, Mr. Joseph. Now, let me begin by asking, how huge is the rate of fraud recorded in fintech companies in Nigeria?
It's huge. If there's another adjective other than huge, because just in 2020 alone, between 2020 and 2022, an estimated 160 million naira, or billion actually, was lost into fraud, just among the 3 fintech companies alone, so it's a huge problem. Just last February, just to give you an indication, Flutterway was reported to have been hacked in the tune of another 6 billion naira within a transaction of 60 transactions, just in last February. Of course, they sort of tried to underplay it, but the news is out there. So the fraud is huge, and it needs to be combated in a very, very dramatic, drastic way. Otherwise, it's going to create an exodus of investment. So it's huge.
Now, part of the increase in the fraud rates has been attributed to the surge in digital payments following the cash scarcity caused by the banknote redesign in 2023. Now, how much did this affect fintech companies?
Well, the impact on fintech was much more evident. It was much more, glaring during that period. But the incident of fraud was not just about the cash crunch. It's been happening before then, and it continued to happen. It's a surge. Let me give you some figures. In 2022, NIBS alone reported a web, I think web transactions, the fraud rate in web transactions went up by 47%, 2022. Mobile went up by approximately 36, and ATM, you go between 9 and 15, depending on who's doing the report. POS terminal fraudulent rates went up by 7%. So, I'm not part of the people that think because of the scarcity in this cash crunch between that period. I'm not one of those advocates. I'm not. The fraud within the system is been eminent for a long time, and that's due not just because of the cash redesign or Naira redesign. I think it's much more prevalent. It's been much more prevalent between beginning of the 2020s. For example, if you look at the banking sector, so the commercial banking sector itself, there's always been a problem with the issue of KYC, the know your customer issues. And a lot of the fintech companies who were involved in online mobile banking were not taking the appropriate measures during the KYC onboarding process for customers. Imagine as far back as 2019, you could open, or 2018 actually, you can open a bank account online without having to supply, KYC information, sufficient KYC information, like, there was no biometric authentication of customers. Customers were just getting onboarded because it was really a race for customer acquisition, as opposed to taking the appropriate measure in making sure that identity management of the customer is managed appropriately, making sure that customers are onboarded with international standard, that should have been, implemented during the process of onboarding the customer. So the problem is huge. The fraud is started way before the cash Naira redesign, and measures should have been taken from the onset. Regulatory procedures, for example, for fintech, mobile, what they call momos, were not really established until the late 2021. So there was a lot of loopholes. You had a lot of loopholes in the system that the fraudsters were taking advantage of. So people try to make the excuse of the Naira redesign. It is not. The problem, the genesis of the problem was the onboarding process and the lack of regulatory procedures that should have been instituted by the CBN.
Let's now discuss the registry Project Radar, initiated by startup fintech companies that they think would help pool details of, or rather would pool details of suspected fraudsters. Now, how far do you think this will go in saving fintech companies from being swindled? Do you think it will succeed?
Well, I hope it succeeds. It's my hope. Being a player in the industry, it is my hope. But the problem has always been the lack of collaboration amongst the fintech companies themselves. And this is like they pretty much following the footsteps or the template already established by the commercial banks. If you look at the default rate of the banks for loans, the general loans that were given by the commercial bank, the default rates were close to 57% before even the advent of the fintech. Now, sorry. So look at that and look at what the fintechs are trying to put in place now, which is the Radar project. You know, if there is no collaboration, if there is no data sharing amongst the fintech themselves, the problem continues. So you're going to have a collaborative system. You're going to have a centralized system whereby all the players can subscribe to. The Radar project right now is a talk. It's just a discussion, and action speaks louder than words. So Radar project, yes, it's a direction. It's a step in the right direction. Actually, it's a step in the right direction, but it's going to take more than just talk. It's going to take a collaborative, joint approach amongst all the players, not just fintechs, but the commercial banks and all the financial institutions that are involved, you know, the mobile money transfer people, the international money transfer, you know, legacies that were established prior to the fintechs. It is going to be a collaborative effort that can solve the problem. The problem is huge. It's not small. So data sharing, data security, you know, amongst all the players is necessary. Look at some banks, even the commercial banks themselves, they don't share information. You have multiple loan by a singular person with several banks, and banks are refusing to share the information of this particular customer because of, I guess, inordinate interest. So I think the problem is much more than just the Radar project. Let's start from a system where you have a centralized database that's secured, that's robust, that everybody can subscribe to. In other words, you know, you put a system in place like the American system, for example. We have the introduction of the BVN, which again is another move by the central bank to curb fraud and stuff. But how about the integration of BVN with the NIN? How about the integration of the NIN with your driver's license? How about address verification? How about biometric identity? That will really be a comprehensive approach that is not in silo. You have credit people now, you know, you have credit unions in Nigeria, credit bureaus rather in Nigeria, that are trying to solve the identity management problem, but they are also working in silos. You don't have an integrated system amongst all the players. So until the time when there is a centralized identity management system that inculcate BVN, NIN, driver's license information into an encapsulated data that is secured, data center that's secured, then you can now really start talking about, you know, curbing the major challenge of the fraud in the system. It's inherent.
Finally, I will ask you, as a fintech expert, what other methods do you think can be employed to tackle the problem of fraud for fintech companies?
I mentioned some of that in my initial submission. So, one, again, KYC, know your customer. During the onboarding process for every single customer, fintech companies need to put more emphasis on KYC and the AML requirement. AML is the anti-money laundering requirement. So from the onset, when a customer is applying for account opening, let's focus on the security aspect of that customer by engaging the customer and onboarding the customer using the appropriate KYC, know your customer. For example, when we want to onboard a customer, for example, it is essential that we have a biometric profile of that customer. So institute biometric identification. That's the first step when you're onboarding. Secondly, AML. make sure that there is that anti-money laundering signature. Once the customer signs that and you're able to identify the customer properly, you've gone 50%, on the fraud, anti-fraud system. Now, the security of the system is essential as well. What kind of Apache security backend process do you have? Many of the fintech companies who are offering online banking services, they don't have a robust system in place for security purposes. Some of them don't even have a location. In the case of fraud report, have you institute fraud reporting system that you actually have a team that on a 24-hour basis identify that can trigger supposedly fraudulent transactions? There are systems you can put in place, tools you can put in place that can detect immediately a supposedly fraudulent transaction. It creates a trigger for every single transaction. Of course, it costs money to put some of these things in place, which is part of the challenges that some of the fintech are facing. But put security measures in place before you even onboard the customers. So when you are onboarding, triggers are there. So instead of creating a registry of, it's, what did they say that? I think it says that prevention is better than cure. Once this supposedly fraudulent person enters into your system, sometimes it's late for you to identify. So you are talking about creating a registry of fraudulent customers. Before you can even get to that, why don't you try and put in place systems on the front end instead of waiting for the back end procedures to identify these customers? Apache is important in security systems, and then data sharing, like that I mentioned before. People are not sharing data. They are creating systems in silos. This should be an integrated system between the fintech companies and the commercial banks, because these guys operate on both levels. So most of the time when money is moved from an online bank, it's moved to a commercial bank. So there must be a handshake. Gateways can be put in place where authentication.
Well, time will tell how far Project Radar will help address this burning issue of fraud for fintech companies in Nigeria. Mr. Lemmy Joseph, CEO, Echo Solutions, thank you for your time. It was good talking to you. Well, that's it on this episode of the program. Join us next time. See you again.